The EU, G7, Australia and other allies banned the maritime transportation services from shipping Russia's crude oil to third countries if the oil is bought above the price cap of €60 per barrel. However, China is not following the price cap policy and is taking advantage of discounted Russian crude. Despite initial hesitancy, large Chinese refiners, both state-controlled and private, have resumed imports of Russian crude and are now the key crude export outlet for Russia. During the period of hesitation, the smaller independent refiners gobbled up Russia's export grade exported from Far East Russian ports. Russia began to divert its oil product cargoes to North Africa and Asia, while Europe ramped up imports of diesel from the Middle East and Asia to offset the loss of Russian barrels, of which it imported around 600,000 barrels per day before April embargo took effect. At least 3 cargoes carrying 190 tons of diesel loaded in the Russian Baltic port of Barymosk in April were handed to deliver the fuel to Saudi Arabia. The Saudis could export part of the Russian diesel to other countries after refining. Europe was on track to import the highest volumes of diesel from Middle East and Asia in 7 years as EU turned to alternative supply after the ban on Russian imports. Just after fuel embargo, Europe was buying more diesel from the United States and Saudi Arabia, yet Europe still remained the biggest buyer of Russian diesel in January.